What a day. What a day we are having, guys. We are finally seeing some little life out of the market. So in today's video, we are going to be talking about pretty much my strategy, my swing trading strategy that I've been using. It's been performing very, very well. We're up like $800 in like 2 days. So yes, we are finally starting to see light at the end of the tunnel. So I hope you guys all enjoy it. By the end of this video, you guys are going to learn the best swing trading strategy to make money consistently. So I hope you guys all enjoy it. If you do, hit that like button, subscribe, and if you guys want to elevate your trading game, check out our school. It's called the Swing Trading Masterclass. We have private live streams, we got quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. It's honest strategies that I've learned over the past 7 years. So click that link, sign up, and don't forget, you guys can use code TRADER to get 51% off, which is one of the largest sales we've done. So click that link, sign up, and guys, let's jump into this here. So, all right. What on earth is going on here? So one of the things I want to show you is the light at the end of the tunnel. SPX, the S&P 500, we are starting to see some life, right? Sold off down to that 200-day moving average line. You guys can see the last tendencies of it selling off down to that point. We've seen life, right? Buying pressure, buying pressure. Even when we sell off, even here we get some buying pressure on this moving average line. So for me, we took advantage of this sell-off. And the reason why is because we bought an ETF, VOO, Vanguard S&P 500 ETF. We captured the momentum. Now here with this trade here, we saw the heavy amount of support in this range. You guys can see this little block range. Buying pressure, buying pressure, buying pressure. Recently sold off down to that point. This sell-off was like a 5 or 7% sell-off. So, anytime the S&P 500 sells off like 7% in like 2 days, yeah, I'm going to be buying some. Now, the reason why we're getting so much volatility, so much sell-off is because of tariffs, because of the AI bubble, and just a variety of things. The market could be a little overvalued right now. So yeah, sell-off's normal and healthy, but more importantly, if you buy during the dips, you jump your average return rate from 10% to 22%. So yeah, I'm going to be buying the dips. Anytime the S&P sells off about 6-7%, I'm buying some. So that's the approach number one. The second strategy here that I'm doing is a stock that I recently took a position with is ticker symbol EQT here. Now, the reason I like this one is because of the trend, right? Before I ever buy a stock, you need to understand one of the most important things you can do as a trader is develop a checklist. So let's talk about mine. The first thing I have here is the trend. We have this beautiful upward trend here where we see some great buying pressure on this trend line as well. Buying pressure, almost buying pressure, and then we get some here. There we go. And then we have some great buying pressure there. But also here we see this blue line. This blue line is a support line called the 90-day moving average line. This acts as support. So we can look back at the recent time it hit it, and we had great buying pressure. So, for me, we had a great upward trend, sold off down to that 90-day moving average line. Also, another thing on my checklist is to look at the RSI. The RSI was trading for about a 31. The last time I was trading for a 31 was back in this range right in here where we saw some good buying pressure. So we knew that we could get a nice move going in the upward direction. So after this here, after you look at the upward trend, you find some sort of support, you have an undervalued RSI, you want to look at another time frame. Now, everybody always asks, they go, Carter, what software are you using? Before we jump into the next thing on the checklist, I use Moomoo. They're awesome. They're awesome. Great charting, scanning, paper trading, fraction shares. It's a trading broker. I'll put a link to them down below. So click that link and sign up. All right, let's jump back to the checklist. So after that here, after we have, trends, support, undervalued RSI, I look at the earnings, and the earnings isn't coming up. So we're in the clear on that because they actually just released earnings. So the next thing I do is I look at a lower time frame. And this is the thing here. We can see here that EQT had this general downward trend where it hit this level or hit this trend line several times, establishing resistance. Hit it, selling pressure. We'll remove this. Hit it, selling pressure, selling pressure. So now here, what we did is we entered on the move of the new trend. You guys can see the great breakout. This would have been a really, really nice entry point, but I wanted to see where this new trend line would form. And so it hit it here. So now that next day here, we had that sell off. So this is where we got in. Getting in on this new trend line here. Also, as we put these moving average lines back up, it had that support here of the moving average line. So moving average lines, they act as support. They also act as resistance. When the stock's above it, like it is up here, we'll see tendencies of getting support. Now, another thing here I want to show you guys is basic candlestick recognition. You guys can see this candlestick right here where it looks like a T. This is what we call a doji. This has been historically known to be a trend reversal candle, which gave me more incentive to enter this position. So let's go ahead and break this down. So our average cost, we can pull up our trading journal so you guys can see. Our average cost here was near and around 49.16. So 49.16 here puts us right about here, keeping our stop loss about 2% from the current price for a possible push up to resistance, which is up here in this zone up here. Gives a risk and reward of about 6.87. Now, what that means is for every dollar I trade with, I'm hoping to make about $6.87. The reason why this is so incredibly important here is because if you guys are starting out with like $1,000 and you find a stock like this that just say this with a 6-to-1 risk and reward, you're not going to find this every day or even every week. So we'll go with 30 trades over the course of a year, risking that 2% with a 6-to-1 risk and reward. With these types of trades, even if you're profitable with 40% of your trades, so you actually lose 60%, guess what? At the end of the year, you've turned $1,000 into $2,700. And when people break down risk management, this is why it's important. This is why having a broker like this is important, so you can plan out your entries, your stop loss, all that stuff. So sign up with Moomoo, but this is a simple approach. Now, as the stock continues to rally up, we're going to continue to move our stop loss up and up and up, just below this trend line here. Also, another thing here is if this thing does squeeze up, let's just say 3 to 4%, guess what? We're going to be buying, we're going to be selling, not buying, excuse me. We're going to be selling because of the market volatility. Right now, we're seeing a lot of sell-off in the S&P, the Dow Jones, all of that stuff. And just given the market conditions, you take profit. I've never lost money taking profit. So given a stock like this where we could see a little more volatility out of it, the trend isn't the greatest. And what I mean by that is this here, we have seen a little bit of some consolidation in the past, but overall it does have that upward trend. But it's important to note that stuff. So guys, I hope you guys all enjoyed it. If you have any questions, feel free to ask down below. And if you guys want to sign up with our school, Code Trader, sign up with Moomoo, and I'll see you guys in the next one. Take care.